Hey everyone, and welcome to another deep dive with us. We're going to take a look at the markets today, January 23rd, 2025, and boy oh boy is there a lot going on.
Yeah, it's pretty wild out there.
From stocks and crypto to global trends and some pretty interesting company news. We're even going to touch on cacao today. Get ready for a roller coaster. So let's jump right in with a quick market overview. The S&P 500 ended the day slightly up at 6,086. The Nasdaq had a bit more pep in its step, closing at 20,009, a gain of over 0.5%.
Right.
Now, on the flip side, we have the Dow Jones slipping down to 44,156, and the Russell 2000 taking a bit of a tumble down to 2,303. So it's a real mixed bag out there. What's the story? Is it a bull market, a bear market, or something in between?
Well, it's a question we get a lot, and it's honestly not a simple answer. You got to think about it like a tug of war.
Okay, I like that analogy.
You've got trade tariffs back on the table, and that's making investors pretty nervous. On top of that, oil prices are going up, adding another layer of uncertainty. And then we're also waiting on some important economic data, like inventory numbers and the jobless claims report. So yeah, all these things are kind of pushing and pulling, creating this, sense of uncertainty.
Right, so it's not as simple as just looking at the numbers and, shouting, bull market or bear market.
Exactly.
There's a lot more going on behind the scenes. And speaking of ups and downs, we can't forget about the crypto roller coaster. Bitcoin and Ethereum are both down today, continuing their wild ride.
Right. Crypto is famous for its volatility. I mean, it's influenced by so many factors, regulatory news, technological advancements, you name it. Even social media trends can play a role.
Wow.
So today's dip, it could be because of anything, really. But, you got to remember, crypto is still a relatively new asset class, and what its future holds, well, that's anyone's guess.
So crypto can be exciting, but definitely not for the risk averse. All right, let's switch gears and focus on some companies making headlines today. GE Aerospace is soaring to an 18-year high. What's fueling this success?
Well, their recent earnings report was very strong, which is always a good sign for investors. But they didn't stop there. They also announced a stock buyback worth $7 billion and a 30% dividend increase. Those moves, they signal confidence.
Yeah, they're really putting their money where your mouth is.
Exactly. They believe in their future growth and they want to reward their shareholders.
Yeah, pretty impressive turnaround story for them. But not every company is flying high today. American Airlines is actually struggling. Their stock is down. What's going on there?
Yeah, the airline industry is facing some headwinds right now. Fuel costs are up, which is always a major concern for airlines, and demand can be unpredictable, especially with all the economic uncertainty going around.
Right.
Plus, American Airlines issued some guidance that was weaker than expected, which spooked investors a bit.
So while GE Aerospace is riding high, American Airlines is encountering some turbulence. Now, here's something interesting. Elevance Health is having a very positive day, and it seems like their success is lifting the entire health insurance sector. United Health, Humana, Centene, they're all rallying. What's making this sector look so strong?
Yeah, Elevance Health, they released a really optimistic earnings outlook, which is a good sign for the whole sector. Seems like they've got some strategic initiatives that are resonating with investors. And there's also this speculation that the regulatory environment might become more favorable for health insurers soon.
Interesting. So a mix of smart moves and potential tailwinds from regulators. Speaking of regulation, the UK is making headlines for taking on some tech giants. They're launching investigations into Apple and Google's mobile ecosystems. What kind of impact could this have, and what does it signal for the tech sector as a whole?
This is definitely a big deal. We're seeing increased regulatory scrutiny globally, and tech companies are often in the crosshairs. These investigations could lead to some hefty fines for Apple and Google, maybe even force them to change their business models. There's even a concern that this increased regulation could stifle innovation in the tech sector, so, it's definitely something to watch.
It's not just about these two companies, it's about the potential ripple effects across the whole tech industry.
Yeah, for sure.
Okay, let's switch gears again. This one is kind of out of left field. Pluri Inc., a biotech company, is making a surprising move into the cacao market. They're investing $6.5 million in an acquisition. Seems like a strange move. Is this a brilliant diversification strategy or a risky gamble?
It's a very interesting move. We're seeing more companies trying to diversify and tap into new markets these days. Pluri Inc. is known for their cell-based solutions, so maybe they see an opportunity to apply their technology to food production. We could be talking about cell-based chocolate here.
Cell-based chocolate. Now, that's something I'd like to see. Okay, let's zoom out a bit and look at the bigger picture. There's a lot of talk about a vibe shift in the markets. Dollars and bonds are losing their luster while there's upward pressure on stocks. Can you break down this vibe shift for us? What does it mean for the average investor?
Yeah, vibe shift is a term that's gaining traction. It basically means there's a change in investor sentiment, the way the market dynamics are shifting. As investors move away from dollars and bonds, they're looking for other places to put their money, and that's driving up demand for stocks, which could push prices up too.
All right.
So this vibe shift, it could create some new opportunities for those willing to take on a bit more risk, but it also means there's more potential for volatility, so you got to be prepared for that.
So vibe shift is about recognizing these changes in sentiment and understanding how they might translate into market movements.
Exactly.
Okay, now let's talk about those rising Treasury yields we mentioned earlier.
Mm-hmm.
They're continuing to climb as we wait for the jobless claims report. How does this tie into the broader market picture?
Well, rising treasury yields are often seen as a sign of confidence in economic growth, but they also mean that borrowing costs are going up. This can have a ripple effect across different sectors, like real estate and consumer goods. They could be negatively impacted if borrowing costs get too high.
Right, so rising yields are a bit of a double-edged sword. Good for some, potentially challenging for others. Let's break down how all of this might impact specific sectors. We've already touched on the regulatory headwinds facing tech. What about the energy sector? How are they being affected?
Energy is always sensitive to global events and geopolitical tension. With oil prices going up and those trade tariff talks back on the table, energy stocks are likely to see some volatility. Higher oil prices could be good news for energy companies, but any changes to trade policies could disrupt the market. So it's kind of a balancing act for them right now.
Walking a tightrope. Or what about the financial sector? How are they reacting to all this?
Well, the financial sector is definitely keeping a close eye on the bond market. Rising yields could be good news for banks because they can charge higher interest rates on loans.
Makes sense.
But if those yields rise too quickly, it could spark fears of inflation, which could lead to an overheated economy, and that wouldn't be good for anyone.
Yeah, that's a delicate balance they need to strike.
Yeah.
Now, how is all of this playing out on the global stage?
Shifts in U.S. policy and economic data, they always have a ripple effect on global markets. International investors are watching very closely, and what happens here in the U.S. can influence their investment decisions. Emerging markets, they're especially sensitive to U.S. interest rates, so any major changes could impact their currency valuations, equity markets, and their overall economic stability. So it's all interconnected.
It really shows how interconnected the global financial system is. Now, the big question on everyone's mind, are we headed for a market bubble? One expert suggests we're getting pretty close. They say 6 out of 7 conditions for a bubble have already been met. Should we be worried?
It's definitely a valid concern. A market bubble happens when asset prices get inflated way beyond their real value, often driven by speculation and hype.
Right.
It's impossible to say for sure if we're in a bubble right now, but it's something to watch out for. Classic warning signs include rapid price increases that seem unsustainable, excessive optimism, a disconnect between asset prices and underlying economic fundamentals, and a surge in borrowing to invest.
It's a lot to take in, but we'll delve deeper into the bubble question and what it means for you in the next part of our deep dive.
It is a lot to think about, but, even if some experts are saying there might be a bubble, it doesn't mean a crash is going to happen tomorrow.
So if we can't just rely on, headlines and what experts are saying, what are we supposed to do with all this information?
Well, that's where critical thinking comes in and a good investment strategy. You shouldn't let headlines or, those short-term market swings make your decisions for you. Focus on your long-term goals and diversify your portfolio across different asset classes.
Okay, so don't put all your eggs in one basket. But how do we stay informed and make smart decisions in a market like this? It changes so quickly and it's so complicated.
Well, that's one of the reasons these deep dives are so helpful. We do the hard work of finding the stuff that really matters. But beyond that, build a good network of sources you can trust. Look for financial news outlets, analysts, experts, people with a good track record. And be careful of those get-rich-quick schemes and those crazy headlines.
So it's like having a team of advisors for your many people you trust.
Right.
Okay, so we've talked about the vibe shift and this possible bubble. What are some practical takeaways? What should people be watching out for?
Yeah, so this vibe shift, it could mean we're entering a new phase in the market. This could be a time of big growth. But as we talked about, it comes with more risk. Now, with the bubble thing, bubbles are hard to predict. But some of those classic warning signs are rapid price increases that don't seem sustainable. A lot of hype in the media, investors getting overly excited. a disconnect between asset prices and the fundamentals, and people borrowing a lot of money to invest.
So if you see those things, it's time to be cautious.
Right. Maybe reassess your risk tolerance and make sure your portfolio is still working for you.
Don't panic, but be prepared to adapt.
Exactly.
Okay, so we've talked about a lot today, the ups and downs of the markets, the craziness of crypto, high-flying companies like GE, Aerospace, struggling airlines, regulatory crackdowns in the UK, even biotech companies moving into the cacao market.
It's a lot.
And of course, we talked about the vibe shift and this possible market bubble.
Yeah, it's a crazy time to be an investor. The important thing is to remember that everything in the market is connected. Global events, economic data company, news investor sentiment, they all play a part in shaping the market.
So why is this all important to our listener?
Because it means staying informed and understanding the big picture is super important. It's not just about picking individual stocks, it's about understanding what makes the market move and being able to adjust your strategy as things change.
Don't just react to the headlines. Understand the story behind them.
Exactly.
It's great advice. Before we wrap up this part of our deep dive, any final thoughts?
Just remember, investing is a long game. It's not a sprint. Don't get caught up in the day-to-day ups and downs. Focus on your goals, do your research, and stay informed. And if you need help, don't be afraid to talk to a financial advisor. There are resources out there to help you.
Okay, so we're back for the last part of our market deep dive. Before we finish up, I want to go back to something you said earlier about staying informed. It seems like there's just so much information out there these days. How can we figure out what's really important?
It's true, there's a lot of information overload out there. That's why these deep dives are helpful. We try to sift through all the noise and find what really matters. But, you should also try to find some reliable sources you can trust. Find some good financial news outlets, analysts, experts, people who have a good track record.
Right, like building your own personal finance team.
Yeah, exactly.
So as we wrap up here, I want to leave our listeners with something to think about. We've talked about all of these different trends that are shaping the market, tech regulation, energy prices, the economy, the vibe shift. But what does all this mean for the individual investor? What's the most important thing they should keep in mind?
If I had to pick one thing, I'd say adaptability is key. The market's always changing. What worked before might not work now or in the future. So you got to be ready to adjust your strategy, diversify your portfolio, stay informed.
Yeah. Don't be afraid to change things up.
Exactly. And be open to new opportunities. The best investors are the ones who can adapt as the market changes.
Adaptability, that's a great word to remember. It's not enough to just have a plan. You have to be flexible and willing to adjust it.
Exactly.
I think we've covered a lot of ground today. We've looked at the market from all sides, talked about the forces at play, and given everyone some key takeaways.
Yeah, I think we did a good job of diving deep into the market. Hopefully, this has given everyone some helpful insights.
Absolutely. A huge thank you to you for being here and sharing your expertise with us. And to everyone listening, thanks for joining us. We hope you learned something and feel a little more confident about navigating the world of finance. Stay curious, stay informed, and stay adaptable. We'll see you next time.